Home Guarantee Scheme is an Australian federal government scheme. It's available to first home buyers, but also anybody that hasn't purchased a home in 10 years or more. We'll go through exactly how it works soon, but the general gist, it'll get you into a property. Your deposit can be about $40,000 less. You'll save, in most cases, tens of thousands of dollars in mortgage insurance immediately. Your repayments, your interest rate will be lower, so your repayments, you'll save probably 10, 20,000 repayments over the first 2 to 3 years. The eligibility criteria is not too strict. Most people or most first home buyers are eligible. They just need to make sure they understand it, the process, and then they actually go ahead and apply for it before they purchase a home. To start with, we'll explain what it is and how it works. So, firstly, if you were going to go for a mortgage where your parents go guarantor, your parents put their property up as a guarantee to ensure that you will always pay back 20% of the home loan. This works in a very similar way. The government has decided that instead of giving first home buyers cash to purchase their home or something like that, they put a guarantee on an amount where if you don't pay the home loan, the bank can make a claim with the government and they'll actually cover that cost. So there is a guaranteed cover for the banks, which makes their risk much lower, which means they can do a lot for you. So the home guarantee scheme, it's split up into 3 different ones. So first one is first home guarantee, second one is regional home guarantee, and the third one is the family home guarantee. So the first home guarantee and the regional home guarantee, for all intents and purposes, they are the same thing. We'll go through the differences and why you need one over the other later, but they work very, very similarly. The family home guarantee, that's available to single parents, and you can get away with a 2% deposit instead of a 5% deposit. So that one's really good if you are eligible. So the first home guarantee, you need a 5% deposit. You need a 5% deposit. It has to be genuinely saved, so you can't get a gift from your parents, you can't get a loan, you have to save a 5% deposit yourself. Now, if you do that, the government will put a guarantee on your loan for 15%. If you put in a 10% deposit, they'll put a guarantee of 10%, but they are guaranteeing to the bank that you will pay back at least 20%. Now, in the bank's eyes, that means that you are essentially putting in a 20% deposit. The risk for them is the same as if you had a 20% deposit. So you will still get a full 95% loan. You still need to be able to afford 95% of the property. However, there is no mortgage insurance, which is a huge cost. And there is also, you'll get interest rates as if you had a 20% deposit. The family home guarantee works exactly the same. The difference is you need a 2% genuinely saved deposit. Government will put a guarantee up to 18%. But again, you have to be able to afford a loan that is 98% of property price. You don't have to do it this way. You can put in a higher deposit. So if you're a single parent, maybe you put in a 15% deposit, you can still apply under the scheme, get a 5% guarantee, gets you better interest rates, save your mortgage insurance, all that stuff. So please do always check the ATO website for eligibility. I try to keep this as up to date as we can. It's up to date right now, but you never know. So firstly, there is an income test. It is not available for everybody. If you are applying as a single person, and that doesn't mean you are single, you could be de facto, but if you are the only borrower, your income must be $125,000 or less. Now that is defined by the previous financial year. So right now it's April 2024. So your taxable income in the 2023 financial year, according to your notice of assessment, must be less than $125,000. If you're applying with somebody, you want $200,000, and that's joint. So maybe one person earns $199, the other person earns $0. That's fine. Maybe one person earns $90, the other person earns $90. That's also fine, but the total has to be under $200. Joint applications, this one only came in this financial year. You don't have to apply with a spouse. You can apply with a family member, sibling, friend. It doesn't really matter. You both have to be eligible in your own right, and there will still be the income test. And you cannot apply, there cannot be 3 people, maximum of 2 people. Next, you must purchase a property to live in. That one's fairly straightforward. It's not available for investment properties. You must move in, I believe, within 6 months. You must not have owned a property in Australia in the last 10 years. That bit is key. If you owned a property 20 years ago and now you haven't owned one recently, you are still eligible. Must be 18 years of age. Australian citizen, you used to have to be a citizen, but nowadays they also accept New Zealand citizens. They also accept permanent residents. Temporary residents are not eligible. You must have your deposit, which we discussed. It must be a genuine deposit. And then regional home guarantee. So take a second to explain the difference of this. So they work in exactly the same way. It's guaranteed up to 15% of the property price. The regional home guarantee has specific requirements. It's for people that live in regional areas. Now, if you are eligible for both, which is common, you have to apply for the regional home guarantee. But other than that, there's no advantage or disadvantage to doing it. To know if you are eligible, the main one is that, and there is a tool on the ATO website to check, but at least one of the applicants must have lived in or adjacent to the regional area they're purchasing in. Basically, if you live out of the city, it's worth checking on the ATO website. Don't stress about it. That's something that the bank or mortgage broker should do. Family home guarantee, very similar. So 125,000, must purchase it to live in, must not have had one for 10 years, 18 years of age, permanent resident or citizen, 2% deposit, not 5%, and you must be a single parent with at least one dependent child. They do ask for proof of this. There are a few ways to prove it, but you must be a single parent, and if you've previously been married and now you are separated, they will ask for the divorce certificate, so keep that in mind. Next, let's have a look at an example of how we actually save it, what it does for you. So let's look at, I've got the figures prepared for CBA, so Commonwealth Bank of Australia. It works the same with all participating lenders, but these figures are exact for CBA, and then I've done a property purchase price of $700,000 in Queensland. So let's say non-home guarantee scheme. So this person that purchased a house without a home guarantee scheme, firstly, without going to extremely expensive lenders, any of the major lenders, the minimum deposit you are looking at is $61,000. I've not included things like stamp duty, etc. in here. This is just your bank deposit. When you apply for the loan, the bank is going to add mortgage insurance, which is LMI, lender's mortgage insurance. They will add this onto the loan. Basically, if you don't have a 20% deposit, they'll charge a fee, which gets passed on to a mortgage insurer, who will cover the bank's loss should you not pay the loan back. Now they'll add this fee on, and in this example, it is $25,078. Now, because you're not putting in, let's first look, total loan will then be $664,078. So this is your $700,000 minus your deposit plus your mortgage insurance. This is your loan. Your interest rate. Now, because you're putting in such a low deposit, they're going to charge you an interest rate which is at 7.74%. Currently, maybe there are cheaper, maybe there are not, but that's what this example is. And based on that loan amount and that interest rate, your monthly repayments would be $4,753. And your cost, so for an example, cost over 3 years, and by cost I mean your monthly repayments times by 36 months, would be $171,106. Now, with, I've said FHG, which is first home guarantee or family home guarantee, but let's say with a home guarantee scheme. Now, what happens here? Your deposit now drops to a genuine 5%. So 35,000 is all your deposit is, because the bank is guaranteeing the first 20%. You don't have to pay mortgage insurance. The government's guaranteed instead. Your total loan will simply be 700,000 minus 35,000, which is 665,000. Interest rate, now this isn't the most competitive out there right now, but this is Commonwealth Banks. would be 6.69%. And that's because they are giving you the rates as if you have a 20% deposit, even though you don't really. So cost 3 years is now 154,320. The difference, so if we look at your savings, so your savings first, your immediate savings, 25,000, because that's added to the loan. Probably a more genuine way to look at it would be the difference in deposit, which would be 26,000. So out of pocket, right off the bat, you are paying $26,000 less to the bank. It's very similar to the 25,000. Your cost, so over the 3 years, the difference in cost here. So let's say deposit, and let's say 3-year cost, which is just the difference in repayments. The loan amount is very, very similar, but the repayments are quite different. You're going to save $16,785, and your total savings over 3 years by using the scheme are going to be $42,785, which is a huge, huge amount. So not only are you saving $42,800 over 3 years, you are also able to get into your property with a $35,000 deposit instead of a $61,000 deposit. And this is a 57% deposit when you compare 35 against 61. So a really huge difference. So there are property caps. Do check the property caps. You can see them here, which are current, but they're also on the ATO website. I'll also keep these up to date, but the property has to be below this cap for you to be eligible. Now, applying, there are a number of approved lenders, they're called, so you can't apply directly to the government for this scheme. You have to get a loan through an approved lender. Mortgage broker can do this for you, or you can go direct to the bank, whatever it is. Here are the approved lenders as of this date. There is a whole bunch of smaller lenders. Your application actually goes through the bank. You don't apply separately to the government. You apply with it as part of your pre-approval or formal approval. So what you need to actually get for it that's not usually required, Medicare card is a requirement. Most recent year's notice of assessment, so we talked about that. It has to show that your income's under the threshold. If it ticks over to the 1st of July 2025, for example, then you need to get the 2024 notice of assessment before you can get the final approval. So you could still get a pre-approval with some banks. You could still even sign a contract, but before your final finance approval, we have to have that notice of assessment back. And you get the notice of assessment after you lodge your tax return. The ATO will give you a notice of assessment 1 to 2 weeks later. Proof of citizenship / permanent residency, passport, birth certificate, citizenship certificate, whatever it might be. Home buyer declaration. This one's a pain. This is a stat dec, so you have to go to a JP, get it witnessed. It's quite a long form. You have to fill it in very diligently. If anything's wrong, they will send you back. It doesn't matter what lender you apply through, but that form is the government form and it has to be done. And then family home guarantee, dependents birth certificate. Now, once you've got all those on top of your regular home loan documents, there are 2 ways. So you can just go ahead and buy a house and then apply on the fly. A pre-approval is generally recommended for this scheme. Now, to do that, assuming you're applying through a mortgage broker, we will collect all the data, including this. We'll check your eligibility on our end. We'll check that you're eligible for a loan of however much you need, and then we'll get the whole application submitted for a pre-approval. They will assess your ability to have a pre-approval, which is assuming you get the scheme. So they'll check affordability, etc. Then once that's done, they'll send it on to their home guarantee scheme team. They will check everything themselves. They'll check all these documents, income, etc. And then that takes about 2 extra days. And then they'll give us confirmation and say, hey, we've reserved a space for you on the scheme. And you've got 90 days to sign a contract. If the 90 days expires, you're not ineligible. You just have to do the whole process again. So you generally want to do it when you are close-ish to applying The difference between applying for the family home guarantee, first home guarantee, regional home guarantee, it's all the same. You do it through a lender. You have to meet their requirements. You submit it all up front, and they'll go through it. But there's no real difference in that sense.